Hello, happy September 11th, 2025. I'm Ryan Dunstan with East Main Street Insurance. I have Chris Kamara here with Cobalt Insurance, and we are House Calls. Purpose of our podcast is to bring you information about the home insurance market and answer your questions. It's hard to get an agent on the phone, hard to call an agent. Who do I call? I have a question. I'm going to post to a Facebook group and get all my neighbors' information, which is great, but sometimes it's good to go to the source.
I don't know what's setting my dogs on fire.
The dogs are going off. So yeah, we wanted to basically just get on to our Facebook pages and try and get a hold of you and let you ask us questions, let you chime in, let you basically just pick our brains for free. No pun intended, right? Like we're just
no obligation. Yeah, this is a third party.
Yeah,
that we can help you with.
Isn't that like the best? Like you go in and be like, I want to give you a no obligation quote, and it's like, well, there is an obligation, I think, on some point for me to respond back to you, but I think a lot of people right now are just, what's going on? They're all being canceled. They're all being non-renewed, and they all want information.
Ryan's got 3 viewers on his page right now, and I'm over here looking at this other screen, sharing the post to our socials.
Chris, you did the fill in the blanks with California Fair Plan this morning.
I did.
And you got quite a bit of information that you were able to share with us because there are some changes happening, and you wanted to keep us up to date with that, which I appreciate. What was one of the main topics? I know it was about wildfire discounts, right?
The main topic to me was coming in November, the discounts would be available on a granular level.
Yep.
Because there was, certain amount of criteria you must meet to get one discount, certain amount of criteria to meet to get another discount. And now it's on a granular piece by piece level where the discount can apply to 1 or 2 things. Maybe you don't have another thing and you can still get that discount.
Yeah, that's great. And I think one of the cool things that he said on there was you can go back in now and apply it. Like if you already have the discount, maybe the top tier or the bottom tier discount in November, you can go in and now apply for those granular items again too.
Mm-hmm. Absolutely.
So yeah, you will have to reapply. I believe that there's going to be another inspection that's going to be associated with it.
Yes.
So you got that list, and we can kind of go over it right now as well. We can kind of see.
So, yeah, well, actually, going what that 15-minute webinar was with the California Fair Plan and Phil, it was, for the first time, in my opinion, a heads up of what's coming. The actual bulletins haven't come out yet. So we're getting firsthand, hot off the presses information, right?
Hot off the press.
So I'm gonna go down this slide real quick, and we'll get to that part. But
okay.
Today's topics that we're working on is SIGA and then the new Fair Plan discounts. And new meaning development. They're not adding any new discount. It's just how they're now calculating it and applying it.
Yeah, they're tweaking it.
Yeah.
But I think it's still new to people because, or maybe it should retain that new type of title because people think that, it's either a Firewise discount or like it is the other discounts. You know what? It's new. It's new for commercial business.
I didn't go over the commercial. I omitted that in the information provided in these slides, and we can talk about that more later when the bulletins go out.
Yeah.
But I think this is more relevant to our audience.
Yeah, definitely.
Cool. So you've got the talking points. I'll move this slide down and let you run there.
Oh, on what California Guarantee Association is, CIGA.
Yep.
So nonprofit association that protects California policyholders. if the admitted insurance company becomes insolvent. And I was pretty big in banking for a while before I transitioned over. So I just like to give that quick relevant association to like the FDIC, like how the FDIC is for banks.
Easiest way to understand it, right?
Yeah.
That's a great comparison.
Because I remember that, I forgot when it was. I think it was like 06, and the whole bank situation was going on, and they had to up their limits. So California Guarantee Association gives you that extra $1 million of protection over an admitted carrier. And we've gone over admitted before, we've gone over non-admitted before, and what that is too. But
let's focus on what you said is, what does it mean when a carrier goes insolvent? So I think we should back up and say why we write with the carriers we write and what that means as far as security, and then we can go into what is insolvency for the carrier.
Okay.
So we write carriers that are A-rated or better, primarily focusing on admitted carriers. We have excess and surplus or non-admitted carriers, and there are specific rating agencies. We went over that last week. AM Best, Demotech, Kroll was the other one, I think it was.
Yep.
That rate the financial stability of these insurers, that they will be able to pay out claims when that time comes. So you've got these rating agencies, you've got what financial backing they have, and then now we've got another layer we're going over for the admitted carriers. That's SIGA, right?
Yep.
And then what does it mean if a carrier goes insolvent?
So, I'm going to have to go ahead and revert to Paradise Fire, because that was whenever we had an actual carrier. They weren't A-rated. They were downgraded to a B-rated carrier, but they were still admitted in the state. And because of the losses that they sustained due to Camp Fire, I think there was probably some other issues as well, but they were depleted in their funds and they were not able to pay out from their own internal financial stability. So because they went insolvent, the California Guarantee Association, or SIGA, stepped in to help pay for those claims because of them being an admitted carrier.
Great. Yep.
So
sorry, I'm moving a screen around. It's taking me just a second.
That's fine. And again, it only pertains to admitted carriers. Non-admitted carriers aren't allowed the California Guarantee Association protection.
So I got a little bit of a twist to add to this today. So I heard from a birdie that an admitted carrier is not participating in SIGA, and that threw me for a loop. I was completely trying to figure out why someone would say that. And I found the answer. I called the carrier rep and I asked them the question. And the answer is their parent company, which is Nationwide, isn't a participant of SIGA. The paper or the sub-carrier, the actual paper that insurance is written on within California, the admitted carrier, is part of SIGA.
Huh. So that's go ahead.
You equate that to like the State Farms, right? State Farm General, I don't know the exact name, I'm making this up. And I'm not picking on State Farm, but just giving an example. State Farm is the largest insurer in the country, and they have their parent company, and then they have a subsidiary I don't know how you explain it, but there's another company under the State Farm umbrella that is the insurer in California.
Yeah, subsidiary or syndicate.
Yep. Subsidiary is a good word. That's a great word.
Yeah.
But so that parent company, it doesn't make sense for them to be part of SIGA because that only applies to admitted carriers within California. So the carrier or subsidiary they have that writes in California, that is the one that's a part of SIGA. And that is law. It's required. Every single admitted carrier has to participate in SIGA. So that was my education earlier today. I got all the details for that.
So that other carrier, what was their financial stability? Because they are an apparent company of that larger parent company, but because they're a subsidiary, what's their other?
The rating is based off of the parent company, right? Isn't that how it works?
No, because
Is-
the California guarantee, or not California, but the State Farm company you're mentioning that's in California, like California-based risk, they have their own separate financial stability. Yes, they can go to their parent company and ask for those monies, but
Mhm.
they have a separate financial rating.
That makes perfect sense. Yeah, I didn't look that far into it. I was
Okay.
just questioning something about an admitted carrier not being part of SIGA, and it didn't make sense because that's required by law.
Mm-hmm. That's crazy.
Yeah, we learn stuff every day, right?
That's right. Welcome to California insurance market.
So you want to go on the rest of the SIGA information? I know you have a little bit of data here.
Did I?
You have, let's see here. When does it step in? We kind of went over that part. What type of claims does it handle?
So because of how large they are, they'll handle property claims, liability claims, workers' comp claims, because they're in the entire state. So I guess for the sake of homeowners, wildfire, I guess is kind of the biggest topic, right?
You already gave that great example with Paradise. Yep.
Let me see. I was
I
looking
like part 5 where it specifically says even if you never deal with SIGA directly, it's a confidence booster that you can count on something to be there to pay claims in case your insurer isn't able to.
Yeah. And that's maybe why I think a lot of the admitted carriers have stepped away. I mean, it's probably not, to be honest. Now I think about it.
Yeah, I was going to say that's a little too small of a factor.
Yeah.
I would think more of California Fair Plan exposure would be a bigger factor.
So yeah, I guess at the end of the day, it's not there to replace your insurance. It's there to give you, like you said, that safety net, to give you that peace of mind that if your company fails, you do have protection by the state to kind of help pay for your claim.
Cool. We'll move on to the next then.
Okay.
So the next slide is, it says new, but again, we're just specifying the new method. It's not a new discount that was added. So more specific discounts are coming starting on November 15th, which is 2 months away. Like I said, we were on that webinar this morning. It was a very heads up kind of webinar. It gave us a lot of information. I took a few screenshots. I'm going to show those here.
Okay.
The bulletins are going to come out, and when they come out, we'll be able to share more information. But here's the screenshots I took, and I highlighted a couple portions of it. So the cool part, and for me, was this right here in the middle. I don't know if you can see my mouse, but it's effective November 15th. The discounts, as always, only apply to the wildfire portion of policy premium. The total dwelling fire discounts can add up to 16.4%. And then discounts can now be applied for individually. So there's 5 discounts for immediate surroundings, 5 discounts for structure, property level completion discount, if you meet all those, and then community discounts. So they lump together the fire risk reduction community and the FireWise designation.
Well, they didn't essentially lump them together. They are still separate.
Yeah, that was very confusing when I heard it. So we'll get more information in the bulletin, but the way they were expressing it was they were together. So more clarity coming.
Yeah, I think it will, just because I have the actual form, it is still a part of the tier. It's its own tier, but you can apply for either one of them separately.
Okay. So it's an either or either and or?
Yeah, you can apply. You can be in both the FireWise community plus the fire risk reduction community, which we've gone over.
Would that increase the discount, or does it, as long as you have one or the other? That's my, I guess, more detailed question.
is what?
So I'm part of a fire risk reduction community
Okay.
and not a Firewise community. Is it the same discount as if I were in a Firewise community that wasn't in one of the 25 fire risk reduction communities?
No, you can now apply for the fire risk reduction community on your own, and you don't have to be a part of the Firewise community. So
Yeah, we're talking two different things. So
Yep.
the fire risk reduction community, there's 25 of them
Yep.
right now. Let's say I don't live in one of those 25, but my neighborhood is a Firewise designated neighborhood. Is the discount the same?
yes,
Okay, so it's and/or.
yes, it's and/or.
Okay, got it. But yeah, we'll have more information on this. This is, like I said, we got a heads up.
Mm-hmm.
Pretty cool stuff. We've gone over this before. I just put it on the slide. The two main discounts, right, is the immediate surroundings and then structural hardening, the hardening of your home.
Right.
Nothing's really changed there. This part's super simple. How to get the discounts? Talk to your agent or broker, right? See if you qualify. Answer the questions about your home. There will be an inspection. That they've said that numerous times in the webinar, and then they'll add the discount to your policy.
And Phil was even, really stressing that the insured and yourselves really need to go over these, because I can see where if there's going to be a multitude of people just applying for them right out of the gate, and then they come back and they find out it's not, that the billing department, there's so many intricacies of people having to change their whether there be their coverage limits, and now it affects the billing. This discount is going to affect billing. If it's your mortgagee bill and or you're paying for it and then billing doesn't catch up, and because there's no grace period, I think it's really it's really imperative that you're going through all of these items and you're applying correctly for what you are applicable for.
Yeah, I mean, I could see if there's a lot of people applying for the discount, not getting it, inspections happening, and then they change the process. They're going to say, we won't apply the discount until you could prove that you have it, whether it be photos or an inspection. And I would hope that we don't get to that part, but I could see if there is people doing it indiscriminately and it being so much more work that they do change the process. Not saying that's what's being talked about, but I could see down the road that something like that could be happening.
Yeah, and or not give, like you say, not giving it to people at all, waiting until the inspection comes out, and then that inspector is the one. Now you're relying on a third party to make your determination, and then they may not do it because they're not a vetted. They're just there to take photos. Essentially, they do say like, oh yeah, everything looks great, and then people come back saying, oh, the inspector said it looked great, and why isn't it great? Because they're just there to take photos. They're not there to actually talk about coverage issues or go over coverages at all.
Do you know of any carrier that does inspections internally, or are they all third party? All my carriers that I'm aware of do third party.
Yeah, they're all third party.
Okay. So yeah, that goes exactly to it. The person there smiling, taking the photos is not the one that's looking at the photos, making a determination.
Yeah, they're not the underwriter.
Yep.
I could see admitted carriers transitioning to that, especially someone maybe like Travelers, and I hate to throw just a name out there. It's just, because they have that wildfire defense services where they go out there and they subcontract wildfire prepare or like CAL FIRE firefighters or another security firm or whatever to go over your property. So I could see a larger admitted carrier when they come back into the market, because they've got this exact same framework as well, and that's how they're starting to build their policy form. Is they basically employ their own internal inspection company.
Yeah, I don't know of any that do it in-house. That was just my thought. Maybe I just wasn't aware, but Yeah, they're all third party for our carriers.
I mean, they should be, right? And I think with AI now coming in, and a lot this is the second company that I heard of that's starting to give the app and letting the insured do their own inspection.
Mm-hmm.
They're probably going to give them a checklist and say, hey, here's your items. I need you to verify all these right now, and then I'll give you the discount.
Well, there was a tech company a few years ago that came in and said, hey, we're going to schedule a video call. The homeowner has to take the video call and walk around with their smartphone and show under the sink and everything else. They were applying it in real time. So then you don't have to wait for an inspector to show up. The client has full control over the camera.
Yeah.
But the underwriter gets the information that they need, right?
Yep.
So maybe they'll go back to that. Forget the inspector. They'll just have the homeowner walk the property.
Yeah.
Which was, from a tech company, pretty great idea.
Yeah, you can leverage it, and you can put the power of the tool right in the consumer, and they're there. You don't have to pay an extra $150 or $200, however much the inspection cost is, to send another company out to go do it.
Cool. I'm
That's
going to move up on
we got to change with
here. I'm going to move back to this one here, and then did you want to share what you were looking up earlier, or did you get a chance to look that up? You want to show it in real time?
Oh yeah, just to see what kind of rates that we're looking at.
Yeah.
Okay.
I'm going to turn this one off. So.
Well, I can just go over, share it. DOI share.
Perfect timing.
Yeah, I guess let me see if I don't see anyone watching. Don't know if
I didn't see any questions, but I will check now.
Yeah, let's real quick see. I don't see any money on mine.
Were you able to share it to the Placer one?
No, let me do that though. Share it to Placer group. I feel like there's this radio show up here that I used to listen to called Swap Shop.
Mm-hmm.
And, I'm just like waiting for someone to call in and we're answer the question, and like that'd be the power of us doing, what it is we're doing.
Sure.
But yeah, there'd always be like some old guy, and he'd be calling in and be like, I'm trying to connect with that guy that's selling that refrigerator for $20, I got it for you. Here you are. So yeah, I don't see anybody. I don't
see anybody on. That's totally fine.
Just share it to the Placer. That's fine. So I'm going to go ahead and go into the Department of Insurance website just to check and see what kind of rates that we're dealing with. I don't think we did this last week. But every week, the Department of Insurance, they get their rate filings. We can see kind of who's looking to re-enter the market. So I just go up here to Department of Insurance, insurance.ca.gov, type in rate, and then it says my rate filing approvals, rate filing lists, and go to the lists. Oh, did it go to a separate screen, or maybe it didn't? And then
we see your Google search results.
Yeah, I'll have to go back in and update the screen sharing. Replace it with, where are we going? Here. Just waiting for it to load right now.
While that's flipping, while that's loading, let me turn that one off just for a second. I'll turn this one on. So this is the SIGA website, SIGA.org.
Okay.
And I'm just going to hit deny on the cookies here. But it's exactly what we went over here. And then they can answer some questions if you have any questions or want to look further into it. But it's pretty good. Like what I'm seeing here, it's got a lot more information now. and it's very easy to access. So siga.org. And then I'm going to turn that one off and turn yours back on.
Turn mine back on. So this is the report, and looked here on the numbers, you can kind of just see.
Can you blow it up a little? I'm older. It's hard to see.
Okay, yeah, definitely. For you, let me go to
There
your.
we go.
Oh, that's too big.
Too
Okay,
big
well,
there. There we go.
so you can quickly look to the overall rate percentage just to see, what they're applying for.
And this is public information, right? Anyone
It's
can go to
public
California Department of
information.
Insurance.
This is small commercial. This is another commercial product. Here's Great American with commercial auto,
Mm-hmm.
commercial umbrella. So it doesn't look like anything for homeowners. And you can see it here because there's personal. Here, this Mopfre. They are changing some of their policy form. So they have to actually put that through the Department of Insurance as well. Anything, whether it be a rule change, form change, rate change, they have to notify the department of that. So doesn't look like anything this week. I can look and see, since we didn't check last week, if there is anything.
Oh yeah, let's do that. I'm going to pull up some information on my side too.
And screen share, my public rate. Nope. Oh, it's a window. It's a window. There we go. Okay. Collector vehicle. Oh, maybe we did do this last week, because I remember talking to Aurora about the collector vehicles rate increase. It was
So I'm looking.
but the Mercury has a rate increase, or no, AAA. I'm sorry. All programs for homeowners, 6.9%.
And that number is very a key number, right? Very much a key number.
Yeah, so the max they can do is 6.9%. Anything above that requires another high-level overview of why you're asking for so much, and you really got to open up your books.
Mm-hmm.
And good for me that Fair Plan asked for more than 6.9%, because they opened up their books, you could really see more of that transparency of where they're saturated at, where all these policy forms are, who's sending in all the forms. And, they had to really just drill down. I feel like I've got months worth of data that really helped me understand Fair Plan a lot more and what they were going through.
I'm looking at an email from August 12th, so it's about a month old. In July, there were only 2 property programs with rate increases approved in July. And then approved in July, Allstate received a hefty increase for auto and motorcycle, nothing for home. And for those with Tesla insurance, they received a double-digit rate increase as well.
Well, and I think a reason for that is because they just started taking on more than just Tesla. They were taking on Fords and.
Is that true? I didn't know that.
Too.
I didn't know that.
I think there was 3 people in our office that had Teslas, and they were coming to me, and I was like, I think, because Tesla offered insurance, and they're like, oh, their rates are bad. And I was like, yeah, but they're also starting to do the other vehicles, not just Teslas, to try and get that, more household product.
Mm-hmm.
I was just trying to look and see if there's anyone else that had a question.
I'm looking through this spreadsheet for any other approvals, but I don't see. Because the one you were looking at just goes for the last week, right? Isn't there a spreadsheet that gives you historics so you can go through each month?
No, that marketing rep that does that is amazing.
Okay.
They just pick out all of the filing data and then they input it into that sheet for us.
Got it. Wow, that's a lot of work.
I'm trying to think if anything has come up since we spoke last week other than the ACV for the roofs. I think Phil's webinar tried to hit on that real quickly too. He had a bunch of slides. I didn't.
He did. I've got a whole folder of all those slides. Yeah, absolutely.
But one of them was about the dwelling replacement cost coverage and talking
Well,
about
we could see that. Let me give me a second here. I'll go into the Fair Plans website.
It was in the broker portal resources.
That's where
and
I'm
one
going.
of the
Yep,
sheets
and
that
I'll
you
share
provided
that.
earlier too.
Here. Oopsie. One moment. All right, so this is the broker portal, and then we're going to go to bulletins. And then what were you saying was there?
The dwelling replacement cost coverage. I don't know. It's not going to be on there because that last one is July 2nd. So nothing there.
Replacement cost eligibility changes?
No, that's back in
ancient.
2012.
Yeah.
It was one of the slides that he showed.
Yeah, I saw it. I like the slide, but I don't.
Yeah, the slide is great. I'd love to use that more. I probably will.
Endorsements, system maintenance. Yeah, I don't see anything for this year.
Okay.
Would it be somewhere else?
I don't think so.
I don't think so either. Replacement cost addendum right here.
Maybe.
Let me download that real quick.
Nope.
No.
But that's the form. That's the one that I give to a lot of people to prove about the whole 25% or the whole 25-year thing, because it stipulates right in there.
Mm-hmm.
But
this is an old form, right? I don't think it's been updated in a long time. Yeah. 2016.
Yeah, they don't really update forms a lot, which is unfortunate.
Yeah, I don't think it's going to be there.
Also feel like, Fair Plan's gotten a lot better at getting back in touch with agents.
Mm-hmm.
I think
that's why I was very impressed with this morning's webinar.
Kind of unfortunate we couldn't ask questions, talk to them.
Yeah, they didn't have that much time.
Yeah.
What else you see going on? I've got a lot of issues. I got a lot of people coming to me for multifamily dwellings, so more than 4 units, and those are pretty rough.
For getting a quote?
Yeah, for finding markets for that.
Well, that's E&S. That's the power.
Oh, absolutely is. Yep.
Oh my gosh.
It's a lot of shopping there.
Yeah. Yeah, I feel like the dust is settled, or maybe this is that first year where it was off of a few admitted carriers in the past. And now that it's been in the E&S market, now some of the clients are shopping it out because the rates have almost probably doubled from what it was last year.
Absolutely.
So some of them that got in with the right carrier, or maybe they haven't filed for rate increase, are going to stick with them, and other people were going to go elsewhere.
Yep, I agree with that. I'm pretty tapped. I don't have anything new to go over. That was the subjects we have. What about you? You got anything?
I don't. Yeah, I was gonna say we should probably call it. We don't have any other people coming out and asking questions or looking for anything. Did you have anybody start to watch?
I don't see it. I know I was able to see it earlier, and I just can't find in the system where I saw that. I'm gonna go to your Facebook page. We'll see, because I shared it from your Facebook page. We'll see if there's any watchers there. Nope, no watchers right now.
Well,
Well, we'll just call it early today, and
we're gonna call early, and I feel like we should maybe try and revert. We got to find a time after 5, maybe, to try and.
I agree. It's just
do that.
not Tuesdays and Thursdays for me. So
Yeah,
Monday, maybe.
possibly
Okay.
Mondays. I like it.
Cool.
So we'll chat about it. We'll post to one of our Facebook pages or one of the groups that you may be in watching this, and try and get your questions if you have anything out there.
And even after this, these posts will remain. If anyone has any questions, feel free to post them there, and we'll address it in the following week.
Yeah, that's true. That's a great tip. Definitely.
Cool. Thanks, Ryan. I'm going to end the stream.
All right, Chris. See you.